Now, the European Commission has proposed some tough new transparency rules for intermediaries. These are tax advisors, accountants, banks and lawyers. Last year's Panama Papers scandal revealed there are billions of dollars lying in hidden funds. Now the European Union is cracking down on tax avoidance. Tax advisors, the ones who design and promote tax planning schemes for clients, could now face fines if they help companies cut their tax bills by shifting profits to countries with lower tax rates. EU officials say the UK has already introduced the measure and has managed to reduce tax avoidance by more than $15 million. The proposed scheme will also include amendments to its complex cross-border tax arrangements, a move which EU officials hope will bring in more tax revenues for member states. Let's get more on this now from Elena Casas, who joins me now from Brussels. Elena, thank you so much for joining us. Tell us a little bit more about what's motivated the implementation of these new rules.
Well, the EU has been trying to crack down on tax havens for years, but as you said, it was really the Panama Papers revelations of last March that have prompted this. The Panama Papers, of course, embarrassed a range of European governments and politicians when some of their financial offshore dealings were revealed, and it brought down one Eurozone government when the Maltese Prime Minister had to call a snap election recently over allegations his wife was the real owner of a number of shell companies registered in Panama. So, as you were saying, the EU is bringing in these new rules. So if you're a bank, you're an accountant, you're a lawyer, you're offering tax advice to people involving any offshore companies, then you need to declare the details of your scheme to your home country, who will then pass it to a European Union joint database that can be accessed by any country, and that needs to be done within 5 working days. The idea is that this will apply to any institution that has any base or subsidiary in the EU, so it doesn't have to be mostly based in a European Union country. That means there's no loophole for Swiss institutions like UBS and Credit Suisse, who are the biggest facilitators of offshore tax schemes in the world. Switzerland, of course, isn't in the EU, but this new proposal has been carefully phrased so that because those companies have bases in EU countries, these disclosures will also apply to them. So the European Commission reckons that about 90% of offshore tax schemes in the world should have to be disclosed to the European Union under these new rules.
Elena, how optimistic are the regulators that these will actually be effective this time round?
Well, they don't force banks or accountants or other intermediaries to actually reveal the names of the people to whom they've offered this tax advice. They just have to tell Europe that these schemes exist and then give the countries in question a chance to research, find out where that money is going and if that tax is actually owed to them. It's been a call of tax justice campaigners for a long time that there be a more transparent international European database to allow governments to find out exactly where tax money is going. And so they're certainly welcoming this.
OK. Elena Casas in Brussels. Afraid we've run out of time. Thank you so much.